Hello there, guys. Welcome. It's Saturday, February 12th. My name is Dave Coker, and this is the week ahead. All right, let's start out like we do every week, taking a look at the markets. And inflation is the name of the game. It's what absolutely everybody is talking about. But can we get ahead of it? Let's talk about this. Well, Spider or SPX, I should say, finished down about 7.3 on the week. It was a brutal week in the stock market. The VIX traded up to 27.36. Close to one standard deviation, which is 27.5, and it's not really a buying up yet. Remember, I've mentioned to you many times that some of my friends consider a sharp 2+ standard deviation move in the VIX as a strong buy signal. We ain't there yet. So keep the faith. Let's hold on. Keep your cash, right? 10-year note, I should say, traded up to 1.92. It was at 1.99 at one point last week, very close to 2%, which again is one of those psychological barriers with the 10-year note yielding 2%. Oil in a very, very sharp move, closed this week at 93.84, during the week up to about 96, up some 24.8% year to date. And I've got big holdings in oil stocks. I ain't selling yet. So this market, well, inflation prints are coming in hot, well above 7%. It's got everyone nervous. Mr. Biden's bellicose warmongering has everyone nervous. We've got a tug of war between fundamentals, very solid fundamentals and valuation, with corporate earnings overwhelmingly exceeding forecasts so far. The S&P 500 to date, earnings reports to date, up some 23% year on year. It's wild what's going on. And finally, we've got pent-up consumer demand and lots of money. So we'll see if they're going to be able to spend some of that cash that they've got stockpiled. So where stocks are going to go is anybody's guess. But as you guys know, I only purchase cash flow generating assets. So guess what I'm doing? I'm buying stocks. And yeah, you might want to think about the cash flow generating game, dividend paying stocks, to get out of that trading rut, because it is really stressful. You really don't want to be doing that stuff. Now, the risk-free rate, as we mentioned, it's rising. And here we've got 1 year, 2 year, 3 year, 5 year, and 10-year treasuries. And you can see that the trend is up. There's absolutely no doubt that we're starting to see an increase in risk-free rates. Question is, how far can it go? Well, when we take a look, and once again, this is off my original research that I sell to banks, when we take a look at the last big spike, because we're at 40-year highs with inflation, when we take a look at the last big spike we had back in January 1990, CPI tracked 13.8, Fed funds, January 1980, 13.8. February 2021, CPI printing at 7.5, Fed funds still 9 basis points. How high can they go? They can go very high. And people are likely to be startled when they see exactly how high interest rates can go. Just look back in the 1980s, guys, and see what they tried to do to control inflation. Right now, we're seeing the Fed actually start to talk up the dollar and start to talk about protecting the dollar. And we know from history, we simply know that the Fed and the U.S. government, I should say, will do anything to protect the U.S. dollar. And so the consumer, people that are living on the margins, they don't care. And so I do expect to see interest rates surge. And we'll have to see how this all plays out. Once again, where are you going to be putting your money? Well, dividend-paying stocks are definitely one thing, and property. That's what I've got big exposure to. Another thing what you want to think about is this. We're getting a lot of negative sentiment right now about gold. One of my bosses on a trading desk said, when everyone's thinking the same, no one's thinking. Hey, I don't care, guys. I'm an open book here. March 2019, I put a huge position of my retirement money into gold and silver. March 2019. Now, I'm up roughly 20% on the gold and about 65%, I believe, or 55% on the silver. I'm holding on. But think about this. There's a lot of headlines coming out that are negative about gold. What are you going to do with your money otherwise? Yeah, I like property too, but the simple fact of the matter is, short of REITs, the price of entry is pretty high for property. So you want to think about this. And you can purchase gold through ETFs. You can purchase Krugis like I tend to do, or Britannia's physical 1/10 of an ounce. Lots of different ways to get exposure to gold. So I would advise you to think about that as well, and sort of think differently than what the mainstream's doing. Of course, not too differently. Here's this guy, Melvin Capital. Oh my gosh, what a mess. Oh my God. It just recently came out, we were chatting about this on the Telegram channel, that they lost 53% by they bet against the people on Reddit, for all intents and purposes, in GameStop. And then what they tried to do to make the money back, they bought 1.3 billion of Facebook. 1.3 billion bucks of that piece of garbage stock. And you simply, I really don't like that stock. It doesn't pay a dividend. And social media, I don't see it as a sustainable investment. I've got lots of oil stocks. They pay beautiful dividends. That's sustainable. And we're not talking about just extraction. I've got companies that actually rent out the pipelines, and they make money all the time, regardless of the price of oil. Very reliable dividend stream. So start to think about that. But we'll have to see what happens with Melvin Capital. There's questions that they might be returning what's left of money to investors. And I don't know, but we'll see exactly what happens there. And this is something that came up. This is really funny. And we don't know who they are. Allegedly, it's friends of friends in the Telegram channel. I don't know. All I know is this. This couple, approaching 60 came in and they called this investment firm and they wanted advice about their retirement portfolio. Got $1 million, not bad. 80% of it's in Tesla. They want help with the other 20%. They want advice. And one of my friends, she had the most perfect answer. She said, my advice is the door is that way, go. Because I'm not so sure about this. What's the dividend on Tesla? What's the long-term prospects on Tesla? You know my view from when we've talked about this before. Every company now has an EV play. Tesla had first mover advantage. Done, done, done. Oh, and no dividend. So why in God's name would you pay for that stock? Why would you buy that stock? I don't know. You're better off putting your money into an asset that doesn't pay a dividend, but it doesn't cost you, because gold and silver, as much as I like it, it does have a negative yield because we incur insurance costs. We incur storage costs. But Bitcoin just sort of sits there. Well, and many cryptos do. And here's the stock to flow model from Plan B. And I've got a lot of faith in this guy. I'm going to stick with him. Of course, I'm not buying solely because he said buy. I was buying well back in 2013, 2014, long before he said, before I knew he was around and said to buy. But his stock to flow model has been applied to lots of different commodities, or I should flip it. Lots of different commodities apply the stock to flow model. He applied it to Bitcoin. And yeah, it's not tracking properly right now. If it did track properly, we'd be at 100,000. We're not. Who cares? I don't. I'm continuing to buy. And I buy every Friday. As you guys know, I buy every Friday for one simple reason. There's only going to be 21 million Bitcoin ever. And I do believe the future price of Bitcoin will be higher than it is today. Oh, and I don't need money. Why in God's name would I sell Bitcoin now, even though I've got fairly large capital gains? Oh, I can give the tax man some money? Yeah, that's it. Sure. I already give the tax man lots of money. And I try to do everything I can to minimize my taxes through charitable donations. Selling Bitcoin so I can fund the governments just isn't in the plan. It ain't going to happen. But check it out. It's actually pretty interesting. And I tend to believe in it. And lots of other people believe in this as well. Forbes got an interesting article about politicians and sports people taking pay in Bitcoin. And you can go through and do the research and look at the money and how much they're getting. They're not taking all their salary. And in fact, Eric Adams took, I believe, just one paycheck, 1 month in Bitcoin. But still, that being said, he's probably got more Bitcoin than 90% of people out there who have just recently gotten into Bitcoin. And if you're one of those people, and we know about 55% of the people that are holding Bitcoin now just decided to acquire Bitcoin over the past year, don't buy and stop. Do what I do what I've been doing for years. At regular intervals, you should be buying Bitcoin. That's called dollar cost averaging. And you would do it in any market where the asset prices are fairly volatile. Every Friday, for years I've been buying Bitcoin. I hope for years forward, I'll continue to buy Bitcoin. These guys, I'm not totally sure. I know Adams took one paycheck, which is okay. It's 1/12 of his annual income into Bitcoin. Let's hope he does it again next year. And the same thing for these other gentlemen. And I'm really bad with sports, so I don't know the other gentlemen. Of course, I know Suarez from Miami, the mayor of Miami. But yeah, guys, think about Bitcoin. It's a passive asset. It doesn't really cost you anything to hold it, unlike gold and silver. And furthermore, if you're into DeFi, decentralized finance, you can stake your Bitcoin. You can use it to generate income. So there you go. All right, guys, once again, it's been an absolute pleasure. You're going to have a really wonderful week. Stay positive. Have some capital on the sideline. Get ready to buy. dividend paying stocks and make some money. Take care, guys.